Welcome to TradeTheMBI.com. This is John. This report is for the 20th of September, and the inflation, re-hyperinflation begins as the rate cut, obviously bonus to the market from that standpoint, but you can already see that the commodities are going to get out of control, and it will start the next round of inflation. And that's just built into that scenario. Of course, magenta over yellow, so that's strong. Certainly weakening shorts, but that's going to have its own implications. You're going to get some back and forward movement because it's much harder for only the long positions to drive market continuing upward cycle. It just goes a little bit slower than when you have those wonderful short cover responses. From an NQ, broke past that ceiling point, reaching back not to the highs that the S&P are experiencing, a little bit muted, but then again, the NASDAQ had been overperforming in a broad sense, and of course you can see shakeout moving into the positive zone. These are all nice things, but the forward look is inflating your way out of your debt. That works if you can not spend as much, but we don't see that taking place. And they don't talk much about it, but the change in who's getting the jobs. Obviously, we've seen that the migrant population has taken up an exponentially large portion of any new job creation relative to disintegration of the middle class. This has implications going forward from a consumption standpoint. And if the government is having to spend money to support the lower wage income earners that are being brought in, then you don't necessarily have as an effective construct as used to be the priority, which was immigration was based on economic value to the society. So a little bit different. But of course, when you have Western populations that are in decimation mode and unable to maintain their death rate, you got to do something. Otherwise, your populations are going to shrink, your economies are going to shrink. Of course, now the Treasury market realizes that they got way ahead of themselves. Even after a 50 basis point move here, the rates are still a little upside down relative to it, but that's only going to get worse as inflation rises, and you're going to cut into additional inflation. So the Fed idea of a target was always bogus in the first place, and this move continues to prove that that's exactly the case. Would expect oil to continue its push back up there. Of course, this is relative to economic activity. The scary thing is, with reduced economic activity, you're still at these values. It's an indication that policy as it relates to energy not as effective as they would hope. This is going to be a boon for a lot of foreign currencies because they're going to continue to rise on this, even though their conditions are far worse than the U.S. situation. It's just the broad leader in the devaluation of their currency to support their debt. It's going to relatively help in a modest way. Of course, some people would say the euro is grossly undervalued from where it had been. Well, I would just argue that it was grossly overvalued originally, and now we just sort of came back to a more realistic approach. And as you can see, the gold continuing to move, and this has been counter to what a lot of people thought would take place given the scenarios with lower rates, and that you would think that gold would suffer under that. It's not going to be the case because that record devaluation is staggering, and this becomes an offset to that. It's always been the case. It's not going to stop relative to where those kinds of things are. And this, like I said, would be a boon to the cryptocurrencies as an alternative hedge. And in fact, they started their move, albeit a little bit late and a little bit behind. The exponential rate at which they can move is going to be significant and may shock some people. Not entirely surprising, though. It's just a choice. I mean, this policy direction is just that, a policy direction. Of course, Powell knows that he's not getting reappointed by Trump, or in fact may just lose his job immediately upon that change. So it makes sense that he would, cozy up to the situation that's going to keep him where he is, regardless of its broader impact. And of course, they don't talk about it, but if you had to cut 50 basis points, that means you missed your opportunity to cut earlier in the cycle, which means you're behind the curve, which they always are. I mean, and at the end of the day, we know they want more inflation than they will publicly state, simply because that erases debt um, by pushing it off onto everyone else through higher prices. From a intraday, obviously the move had been pretty much created in the pre-market. We watched it happening in the European session early. It was easy to get in there, and they took advantage of weak volume situation to really drive things, and that just propelled the absolute short capitulation in this case. But even within intraday, they took profits within that. We saw some evening back uh, from that, but still relatively high. And as pointed out, we were headed to the 6,000 plus range on the ES anyway, and none of that's changed in any way, shape, or form. Let me see if my 50K has popped back up. Yes, there we go. So you can see this was the early morning action as we turned around with Magenta popping up just before, right at the 23%, once it got above it, long all the way, and it was an easy read. Pretty straightforward stuff. It's all exciting. The broader implications, just expect to be paying a lot more for everything as it is. So that's the long and the short of it. As always, trade well. Anything relevant, I'll put in the Skype chat. Have a good one.